per SA 240, auditor responsibility relating to audit of financial statement. Fraud may be defined as intentional act by one or more individuals among the management, TCWG employee, or third party involving the use of deceptions to obtain unjust or illegal advantage. Auditor is concerned with fraud that causes material misstatement in financial statement. Auditor is concerned with two types of material misstatement in financial statement that are relevant to the auditor: misstatement resulting from fraudulent financial reporting, misstatement resulting from misappropriation of assets. Misstatement in financial statement can arise either from fraud or error. Fraud is intentional, whereas error is unintentional. Possible source of fraudulent financial statement. Fraudulent financial reporting involves intentional misstatement, including omissions of amount or disclosure in financial statement to deceive the financial statement user. It may be accompanied by following: manipulations, falsifications, alteration of accounting record or supporting document, misrepresentations, or intentional omissions. Intentional misapplication of accounting policy, MMI. Different ways to commit fraud: recording of fictitious journal entry, particularly close to end of accounting period, to manipulate the operating result or to achieve other objective; inappropriately adjusting the assumption or changing the judgment used to estimate account balance; omitting advancing a daily recognition in financial statement of event or transaction that have occurred during the reporting period; concealing and not disclosing the fact that could affect the amount recorded in financial statement; engaging in complex transactions that are structured to misrepresent the financial position or financial performance of the entity; engage in complex transactions that are structured to misrepresent the financial position and financial performance of the entity; altering the record or terms relating to significant or unusual transactions. Misappropriations of assets may be committed by following: ESCU, embezzlement of received, stealing physical assets, intellectual property or rights, or causing entity to pay for goods and services not received; using entity assets for personal purpose. Characteristics of fraud क्या होता है? IAS होता है. Incentive या pressure to commit fraud, perceived opportunity to do so, rationalization of the act. Incentive या pressure to commit fraud, it may exist when management is under pressure from the source outside or inside the entity to achieve the unexpected earning target or financial outcome. A perceived opportunity to do so, it may exist when individual believe internal control can be overridden because has the knowledge of a specific weakness of internal control. Rationalization of the act, individual may be able to rationalize committing a fraudulent act. Some individual possess an attitude, character, or set of ethical value that allow them to knowingly or intentionally to commit dishonest act. However, even honest individual can commit fraud in the environment that impose sufficient pressure to them. ऑडिटर रिस्पॉन्सिबिलिटी क्या होता है रिलेटिंग टू फ्रॉड? ऑडिटर रिस्पॉन्सिबिलिटी क्या होता है? ऑडिटर का ऑब्जेक्टिव हो क्या होता है? तो टू आइडेंटिफाई एंड असेस द रिस्क ऑफ मेटेरियल मिस स्टेटमेंट in financial statement due to fraud, to obtain sufficient and appropriate audit evidence about the assessed risk of material misstatement, to respond appropriately to identified or suspected fraud. रिस्पॉन्सिबिलिटी बोलता है रिस्पॉन्सिबिलिटी ऑफ प्रिवेंशन और डिटेक्शन ऑफ फ्रॉड बोलता है द प्राइमरी रिस्पॉन्सिबिलिटी फॉर प्रिवेंशन और डिटेक्शन ऑफ फ्रॉड रेस्ट विद TCWG एंड मैनेजमेंट और टू इंश्योर द प्रिवेंशन ऑफ फ्रॉड मैनेजमेंट मस्ट हैव ए कमिटमेंट टू क्रिएट ए कल्चर ऑफ ऑनेस्टी और एथिकल बिहेवियर. Risk associated for non-detection of material misstatement. Owing to the inherent limitations of internal control, there is unavoidable risk that misstatement in financial statement may not be detected even though audit was properly planned and performed in accordance with SA. The risk of not detecting material misstatement resulting from fraud is higher than the risk of not detecting one resulting from the error. This is because fraud may involve sophisticated and carefully organized scheme designed to conceal such as forgery. The risk of auditor not detecting material misstatement resulting from the management fraud is greater than the employee fraud, as management is positioned to directly or indirectly manipulate the accounting record and present fraudulent financial reporting.